Welcome back to another video. My name's Adam, and today we're going to be going over whether or not Viacom stock is a buy at these levels. Okay, it has taken a precipitous decline from over $100 to now less than $45 a share, down by 57%. If you don't know what this company is, basically it's an American diversified multinational mass media conglomerate company, and recently there has been quite a bit of hype into this stock. If we look at the 1-year chart, it went from $13 all the way to, again, over $100, a 600% increase. And then look at this steep drop just in a short amount of time. In basically a week and a half, it's dropped by 55%. Okay. And the reason why there's so much hype in the stock is because now it's going into the streaming platform with this Paramount Plus. It has exclusive rights to some NFL streaming content for their games. And it has been pumped up. But the reason for this fallout is due to the Archegos capital fallout, and this resulted in a mass sell-off of shares. And now, some could say that this is a pretty attractive valuation. Okay, has a price-to-earnings ratio trailing 12 months of 11.5, dividend yield of 2%, so not that high, but still, at these levels, it could be a solid play. Okay, so let's take a closer look and see whether or not this stock is a buy. So here, let's just talk about what happened, basically. So Bill Huang, who was the leader of Archegos Capital, I'm sorry if I'm mispronouncing that, is the man behind the fund. The story of Archegos may be one of the fastest creations and destructions of wealth in recent history. Okay, so the history behind Huang: he moved to the U.S. from South Korea. Despite initially knowing little English, he got degrees at UCLA and Carnegie and Carnegie Mellon, and landed a job on Wall Street under Julian Robertson, etc., etc. So there was an SEC investigation into insider trading and stock manipulation, so he wasn't able to manage money. But then he was able to manage his own money, and he returned 900% over 7 years using complex financial tools called swaps. For example, credit default swaps were very popular in the 2008 financial crisis, and he amassed a portfolio worth over $10 billion per estimates. So then Huang's bets on companies like ViacomCBS started to sour. His lenders had to cover their obligations, and he lost $8 billion in 10 days. That's a ridiculous amount of money, as there was selling in the market. And it was the biggest single firm meltdown since the financial crisis, per the Wall Street Journal, and it's causing introspection into finance about the ability of private family offices to cause market havoc. Again, I believe Credit Suisse was probably one of the lenders, and Credit Suisse also took a beating. So let's just look at, again, some of the fundamentals of ViacomCBS and what analysts are expecting. So again, right now, market cap is around $27.6 billion. 1-year target estimate is $57.48. And right now, we can see the current market price is $42.88. If we look at their earnings, quarterly, they actually earned a decent amount of money, $810 million in the past quarter. Annually, they earned $2.4 billion in 2020 against revenue of $25.29 billion. And we can see here analyst ratings. The average price target is $57.48 from 23 analysts, whereas the current price is $42.90. So if we want to calculate exactly how much upside this stock potentially has, we basically take the current price, so the current target, 0.48, and we divide that by 42.92, and we get a current upside of 33.9%. Okay, so that's a pretty significant upside, especially considering that there's this forced liquidation happening, and so it might seem like that these shares are trading at a bit of a discount right here. Okay, so again, if we're looking into the forward price to earnings ratio, it's 10.12, which is even lower. And in a market we're sitting in right now, the price to earnings ratio is generally for other stocks such as Disney that have their Disney Plus, and even Netflix. We can see here price to earnings are around 91. Forward PE is probably around like 7. Okay, so this shows that Viacom may be decently cheap. Okay, if we also have to look at, there's a pretty high short ratio. Okay, it's about 1/5 of the 16% of the shares outstanding. So close to 1/5 of overall shares outstanding are shorted. And basically, what happens when there's a lot of shares shorted? It's a GameStop type situation. But again, of course, it's not extreme, because with GameStop, there were actually more shares shorted than there were shares outstanding, which was an extreme situation. But even with the 16% shares shorted out of the overall shares, that's a quite high amount of people shorting the shares. And of course, if the stock moves higher, then these shorts might have to be forced to liquidate their shares and then buy into the market, which will push the price up. Okay, so that's one thing to consider as well. Next thing, let's just take a look. This was actually taken from Wall Street Bets, and I actually like it gives basically the fundamentals and why ViacomCBS is still a good business despite this massive downturn. Okay, so Viacom also priced an offering at $85 per share. Of course, that didn't go well because it also coincided with the fallout of Archegos capital. And the institutions, hedge funds who bought at those levels had no choice but to reduce their cost basis at current levels. Okay, the forced liquidation of Archegos capital led to massive Viacom blocks being sold in the market at a discounted price, which aided the nasty continuous sell-off. There's been a drastic decline in volume in the past few days, which signals that the liquidation phase is near or at its end. So we're going to take a look at that by looking into some technicals. VIAC's bullish momentum came from a few factors: their new streaming service Paramount Plus, similar to Disney Plus, ViacomCBS reaching 11-year agreement with the NFL for exclusive streaming rights of football games, extremely cheap valuation relative to market, and a company that follows the value reopening cyclical trend in a higher yield environment. And they're saying it's not some meme company, but I also wouldn't be surprised if the Wall Street Bets crew would bet on the stock because it's kind of similar to other beaten down plays. Okay, let's just take a look at some of Viacom's new press releases. So recently they acquired Shell-Vision, and usually when one bigger company acquires another, usually the stock price falls, and we can see the stock did fall today by more than 3%. And again, exclusive US rights to Series A with more than 400 matches each season. Maybe this is talking about football or some other sporting events. This share offering did not go well with the stock price. The stock price, of course, massively decreased. And ViacomCBS and NFL reached new long-term multi-platform rights agreement through the 2033 season. So that, again, like around 11 years here. And again, you can go. So these are just some of the press releases that Viacom has put out, and it's nice that they're taking seriously the move towards streaming services. Okay, and I mean, look at Netflix stock. Like, of course, it works. It's like up 383% over the past 5 years. So let's take a look at the technicals and where I like Viacom stock and where I will be buying. Okay, so again, we can see huge, like over $100 per share price, and then now again back down to $42 and change, close to $43, and still we can see quite a bit of volume here. The red bars represent the trading volume, 55 million in trading volume just today. So I would like to see it back at their current levels of volume, maybe around, like you can see on the left of the screen here, they show you the volume. And I'd like to see the volume go back to maybe, 17 million, like 18 million before I decide to buy in. But you can see a massive dip in the MACD. Moving average convergence divergence of -7. It crossed below the signal. So we can still expect some more downward pressure in the stock price before it reverts to more upside. And we can see again, this is the relative strength index. Technically, I would say around 30 is oversold and over 80 or 70 is overbought. So clearly this stock was overbought when it was priced at around $100 per share. That's not surprising, but now it's actually looking that this stock price is nearing or is at already oversold territory. So I actually wouldn't mind acquiring a few shares of ViacomCBS. I mean, I'd like to see this stock go to around $42 a share, and then I might have to pick up some shares. I'll probably reevaluate in a couple of days and see where the stock is at. And again, I think patience will be rewarded with the stock. So of course, you don't want to catch a falling knife. You could have caught it at around $66. You would have been burned because then it fell down to $45, and now it's at $42. Okay, so I want to see the selling pressure ease. And I think that, you could take advantage of this Archegos fallout. Okay, so that's all I have for you today. As a reminder, please subscribe to my channel if you like this video. I do all stock related updates as well as portfolio reveals. I also have a free Discord channel that you can check out in the link below, where again, we talk about opportunities like this. And there's a private channel where I announce my buys and sells in real time. So again, contact me or message down below in the comments if you'd like more information on that. And finally, if you're in Canada and you would like to trade, buy and sell stocks for $0 commission, check out my link to Wealthsimple below. That's what I use when I want to buy a couple shares and I don't want to pay a fee for buying those shares. So you can also invest in crypto like Ethereum and Bitcoin. I threw $100 in Ethereum about a couple weeks ago. So yeah, let me know what you think. Take care. Love you all and stay safe, guys.